Hello and welcome to Livewire Markets. My name is Chris Conway. Today I'm sitting down with Guy Keller, who is the Portfolio Manager for the Tribeca Nuclear Energy Opportunities Fund. Guy, welcome.
Thank you, Chris. Thanks for having me again.
Of course. Guy, this is the third time that you and I have spoken since June last year, but there's a very good reason for that. It's not just because we love talking to each other and love talking markets. You have pretty much nailed the uranium call over that period. I just wanted to catch everyone up on the prior conversations. So we spoke in June last year. At the time, you were very bullish on uranium and you outlined the structural supply and demand imbalance and said that prices could go only one way, and you had a floor price that you talked about at that time. What was it again?
$75 a pound back then.
There we go, yep. So then we spoke again in November off the back of the World Nuclear Association report.
Yep.
You said something in particular. What was it that you said at the time?
There's no wall of supply.
No wall of supply coming, that's right. At that time, prices were around 75 per pound, which was that initial floor price that you talked about back in June. I did ask you again for a bit of a target. Now, you didn't give us one specifically, but you did make reference to the last cycle when contracting was done at 110 per pound. Am I on the money there?
Yep,
Beautiful.
absolutely.
At last check, uranium was around 106 per pound, so it's within striking distance again of that target that you spoke about.
Yep.
So I think, mate, to say you've called it well is an understatement, so well done. But you and I both know that you're only as good as your last call or your latest call. So here's the big question. Is uranium and nuclear opportunities, is it still investable?
Yes, absolutely. 100% investable because high prices not solve supply. And it's a trickle of supply, not a wall.
Right. One of the factors shaping your view is the supply issues at Kazatomprom, the world's largest supplier of uranium in Kazakhstan. What are those supply issues and how is that shaping the market at the moment?
Yeah, so last year they came out with a guidance upgrade for 2024, which would bring them to minus 10% of their subsoil use agreements. We're not going to go into the details of that, but it was a production upgrade.
Right.
They said that then by 2025 they would improve another 10%, market sold off. I was a fairly lone voice in that, thinking that they weren't going to get there, and then I was on record again in November at a conference saying I certainly thought they weren't, definitely not going to get there. So it was no surprises to me earlier this month that they came out and said, we've got some problems and we're not going to get there for 2024, and it will probably impact 2025 as well. So we'll find out more in early February when they actually come out with some with their stated guidance as part of their quarterly reporting. But I don't think it's looking great for them.
How much does Kazatomprom supply of the world supply or global supply?
They're very relevant. I mean, they're 40 to 45% of global supply. So, and I think for a lot of the Western utilities, there was a belief that they would be able to respond and produce the pounds that the utilities need. And that's proving to be a little bit harder, which again, sets the cat amongst the pigeons, because the world's largest producer of uranium is having problems bringing assets that they know that they currently produce from, bringing them up to where they should be and have been in the past. What's everybody else going to be doing?
Yikes, sounds dire. You referenced it earlier, there's an old saying in the market that the solution to high prices is high prices. That high prices will prompt new supply, that's the premise there. So aside from the issues at Kazatomprom, why is it that it's not the case when it comes to uranium?
Yeah, so the reality is that uranium's solving for yesterday, today, and tomorrow's deficit. So there's a lot of work to do, and we've had more than a decade of being, ignoring these projects because of the way the cycle was, and the prices move very quickly. I mean, I don't think anybody thought we'd be at $100 now in January 2024. I mean, we thought it was achievable, but not as quickly. And so there's a lot of work that these developers need to do with permitting, with community, with workforce, with securing funds. I mean, when was the last time a project finance bank lent money to a uranium project? It was more than a decade ago. Wow, okay. So this all takes time. And permitting, I mean, just because uranium's at $100 does not mean a government department is going to move any faster on processing a permit application. I mean, they move at the pace they move. And I think, so that's part of it. And as well, utilities, who are the only source of demand, or long-term demand, they don't move very quickly. So it takes them a long time to negotiate these things. And with the price move being so fast in spot, they're a little bit shell-shocked, so they're not rushing in to try to look to secure contracts with future developers either, which makes it harder for those developers to then go and get the capex they need.
Guy, when we've spoken in the past, we have focused quite a lot on the macro. We've talked a little bit about stocks.
Yep.
For the viewers out there, there's always two elements to this. You've got to get the commodity forecast right, and you've nailed that, as we've talked about. But you've also got to get the stocks right as well. So that's really how you take advantage of the opportunity. Can you just talk through two stocks that you really like right now and have been strong for the portfolio?
I was going to be really difficult and give you some Canadian stocks, but I'll be nice. I'll play ball and give you some ASX stocks.
Fantastic.
I mean, Boss Energy is obviously, it's still my favourite. It's still, we've owned it basically since we started 7 or 8 years ago. And Duncan has continued to deliver on everything he's set out to do. He's in a very unique position now. He's basically uncontracted, so he's got full exposure to the uranium price appreciation. He's imminently about to produce. They've done a strategic deal in North America, which I think opens up more opportunity for that company in the future to do further deals. And they've got some great exploration upside on in and around their current project. So, people sort of say to me, I can't justify the valuation at $5.50. I can't own it here. And I said, listen, I've heard the same thing from the same group of people at $1, at $2, at $4. Yeah. And you can't ignore the fact that, they're one of 4 companies now in the small ords, Boss, Paladin, Deep Yellow and Silex. That's now 3.5% of that index. It's a lot of small cappers that need to start looking at this space. Yeah. And Boss have just recently joined Paladin in the ASX 200. So whilst both of those are a small weight, it's still, the index trackers need to have a look at them. And so that's a weight of money that wasn't in any of these stocks, or in Boss specifically, it wasn't in them 12 months ago, and that now has to look. So, I still back that horse. Yep. And I think his market cap and his milestone so far put him uniquely in a position where, success sort of feeds success. The second one is down more at the explorer end, also ASX listed, and that's DevEx Resources. They've been so far unable to capitalise on the move higher in the uranium price. But I think I've said before, I like explorers that are doing things, and they're active in Northern Territory. They've got some fantastic hits up there, some good prospectivity. Any rusted on old geo that you speak to that spend any time up in Northern Territory love the geology of the area. Some compare it to the Athabasca Basin, and I guess when you say you've got Ranger that produced uranium in Northern Territory and Jabiluka, high-grade deposit, which is sadly out of the picture, there's a reason to point there. And I think that the overhang is basically just, it was a raise that was done maybe at the wrong time and probably went into a few hands that didn't really want it, and then the SPP. Obviously it was underwater, so I don't think there was a huge retail uptake, which meant that sub-underwriters have probably ended up with more stock than they prefer. Yeah. But they're doing something, they're active, and I think that sort of re-rates once you get a little bit that overhang. So that's not a company-specific issue, it's more just an equity sort of investor mismatch, I think, from that one.
Guy, you've shared 2 that you like. I know you have been selling down some of the positions in the portfolio because we have had this incredible uplift. Yeah. Can you talk us through some of the mechanics of your sell process? It's incredibly important to make sure that you lock in those gains and continue to position yourself for any further upside. Yeah. So what does that look like for you?
Yeah, I mean, it's one of the great things about being positioned already and doing a lot of work in December, actually, when markets were soggy, was that for the first 3 weeks of January, when I was sitting on the beach, I was able to not really do a lot. Check the portfolio every now and again and make sure there was no train wrecks whilst everybody else was scrambling. Right. But you do get to a point where, especially your bigger positions, I do have position limits in which I like to keep, and I have rules around market cap and liquidity as to how I like to. So, there's always trimming opportunities there, but it's not wholesale selling per se. And sometimes it's good just to, I need to start in this name, sure, here, have a few, and then get into the screen for the rest of them, thanks. Yeah. But also I think when you do get the sector uplift, I do use it as an opportunity to sell down some of the positions where they're not doing what I expected them to do, because I don't really want to reward bad behaviour. and I want to hold CEOs and boards accountable to the shareholder, as opposed to just the next capital raise and what they're going to do with the money. And so, you know, I have been a bit more aggressive in some of those names because, again, I know there's going to be a round of capital raising in the explorers, in companies I like. So, you know, why? And if they're doing the things I want them to do, why not free up some of that other capital and that's not performing to reward those who are moving the way I want them to.
Guy, potentially part of the same conversation there, again, when we've talked in the past, you have said that you weren't heavily into the developers. Mm-hmm. I know that is starting to change a little bit and you're starting to look at some of those. First of all, why is that? And then what are some of the developers that you've been looking at?
Yeah, I mean, the natural human psychology when things move is to, you know, they want to be in large cap liquid stuff just to test the thesis. And you've seen that in copper and a bunch of other resource stocks last year. Everybody wants to be in large liquid stuff, dance close to the door. And if it goes right, say, look at me. But eventually, as they start to get a bit more belief, they'll look down the stack. What's next? And you're seeing that now. You know, you're getting speculation as to, you know, here on the ASX, there's probably 3 companies that the market are thinking are come raise because they're potentially making imminent final investment decision. I've got slightly different views on the timing than the market may. So, and for me, I think, you know, they're starting to get to the point where, as I said, there's going to be more investor eyeballs. So, I mean, the obvious ones there, when you look at it, Lotus, Deep Yellow and Bannerman. You know, Bannerman that we bought 7 years ago at 4 cents for leverage to, you know, to the retail sort of love of what Brandon did there. Jokingly, was saying if they're coming into production, there'll be a lot of things going right. You know, he's progressed that project and pushed forward in a good jurisdiction as well. So, you know, as I said, the markets, I think, maybe holding some of those stocks back a little bit, thinking that there's going to be a big raise, but they need to get their, you know, their raises for project finance, for final investment decisions. So they need their debt, and there, you know, probably be an equity component, but that's, you know, 2 or 3 quarters away in my view. So, you know, it's good to just be a little bit heavier there as well.
Guy, last question. The format of the interview today is views from the top. Mm-hmm. The purpose is to ask you for an insight that you perhaps wouldn't have gotten if you weren't so heavily involved in the nuclear opportunities for as long as you have been. Yeah. But I want to hone in a little bit and ask you about the current cycle. We know that commodities are cyclical. Yep. What gives you confidence that this doesn't turn into, or uranium I should say, doesn't turn into what we've seen with lithium recently, where we had this incredible ramp, and then, you know, more recently the wind has been taken out of the sails of lithium. So why will uranium be different, and what gives you that confidence?
It comes down to the basics every time, and the mathematics around the basics are fundamentals. As I mentioned at the top of the interview, you know, uranium is trying to solve for a supply deficit from yesterday, for today, and for the future. And, you know, one thing I've learned through other commodities is that China play a very important part in some of these super cycles that we see through various commodities. We've seen that in iron ore and copper and lithium. However, if China's too big a part of the equation, then, you know, you can see what happens with lithium, where bottlenecks and, you know, prices crater, and rare earths, for example. But I think here they're a very important part of the future demand equation. Because they're one of the biggest reactor builders at the moment. They're approving 8 to 10 new reactors per year. So they're very important for the future. But, you know, if they were to turn around and change that strategy, we still haven't solved for yesterday and today's, you know, rest of world supply deficit. So, you know, that's what it comes down to. Plus, I think the way the contracting works in uranium is different. It's not spot-led purchases. It's future purchases starting 5 years out, lasting 10, 15 years, from a sector where the price doesn't really matter to a fuel buyer. What matters is don't run out of fuel. Yeah. Rule 1 and 2, don't run out of fuel. Rule 3, refer back to rule 1 and 2. And so it's a different mechanic of how the market operates. So, you know, which means that those cycles last longer. Yep. And regardless of what anybody says, you know, we're only 12 months into this cycle. You know, yes, it started kicking in 2020, but it was really only last year that the utilities started getting busy in their contracting again, and they're well behind what they need to be doing.
So just to put a bow on it, Guy, you can see the demand 5 to 10 years out because of the utility demand. Yep. And there's no, as you've said before, there's no immediate wall of suppliers coming. So that's what gives you that confidence, is the longevity of of what you're seeing.
Yep, absolutely, 100%. And that wall of supply is, as I said, a function of delays in permitting, delays in all of these things to get a mine up. I mean, any mine's hard to bring up. Yep. Uranium's harder. And unlike lithium, we don't have billions of dollars being thrown at project development by the utilities. So in lithium, it was the Fords, the GMs, the Teslas throwing hundreds of millions of dollars to build these projects. It's not happening in uranium. So as I said, they're relying on the market, which takes time because a bank, it's a brave debt financier who's financed gold for the last 10 years to say, yeah, sure, let's write a check for $1 billion for a Canadian uranium project.
Yeah. Makes sense. Yeah. Guy, thanks for talking with Livewire as always. Appreciate the insights.
No worries, Chris. Always a pleasure. Thanks for having me.
If you enjoyed that interview as much as I did, make sure to give it a like and don't forget to follow our YouTube channel because we're adding lots of great content every single week.